Hello and welcome to your daily news and information update. Today's topic, China's currency problems. The United States Congress is finally starting to act on the problems presented by Chinese currency manipulation, even if the White House is still lagging far behind. The proposed Currency Reform for Free Trade Act would attempt to put a stop to this manipulation by forcing the president to accept that China's practices are illegal and must be dealt with accordingly. It would essentially increase enforcement for laws already on the books. The bill calls for punitive measures in the form of tariffs, import quotas, and other means to go into effect against any countries that violate international manipulation statutes. China would absolutely fall into the category of the violators, and they would have to change their policies or face real consequences. As it currently stands, China is one of the largest servicers of U.S. debt. The Chinese accumulate U.S. dollars through unbalanced and intentionally manipulated international trade, and they then use those funds to acquire U.S. Treasury bonds. During the administration of President George W. Bush, it became commonplace to sell bonds to China as a means of raising funds. Doing so allowed the government to continue functioning despite incessantly lowering domestic taxes. However, this practice, which at first seemed harmless to the Republican administration, has become a major economic and political problem. China can now exert real influence on U.S. foreign and even domestic policy by wielding a so-called currency bomb against the United States. On May 20, 2009, Keith Bradsher of the New York Times wrote an article discussing the nuances of China's treasury purchases. In it, he discusses how the Chinese government, disturbed by America's economic turmoil, has become more selective in its funding arrangements. They are still the largest funder of U.S. debt, but the amount which they hold, which had been growing rapidly, has leveled off. This comes amid public outcry from Chinese officials that the U.S. dollar must be dropped as an international reserve currency and replaced by a basket which would include the yuan. The Chinese government, in calling for a change to global policy, can do so without any fear of retribution from the United States. This is not due to some mutual understanding, but simple power politics. The Chinese control a massive amount of the federal budget and could, if they so chose, destroy the American economy as we know it. Such action would likely hurt China as well, but this is precisely why they are looking for the creation of a new international reserve. They could then drop their volatile dollar holdings into the market and take solace in the strength of a broad-based currency. Meanwhile, the U.S. dollar would experience hyperinflation. The government must find ways to fund itself without calling on China for loans. And more importantly, the United States must tackle China's manipulation of international commerce for its own benefit. Both of these scenarios have led directly to America's current circumstances, and there will be no recovery without major alterations. On behalf of concerned citizens, I'm Craig Harrington. For more on this and other related topics, please tune in daily to economyincrisis.org.
Wake up, America! Open up your eyes! Wake up, America! Wake up!